Hello, everybody. Welcome to MKTRedLine. My name is Kim LaRue. I'm here with Lee Duffy, and we are going to be showing you some of our products. We decided, since we have some pretty crazy technologies, that maybe people wouldn't believe them. So why not show them off to the world weekly in front of everybody, and you can decide for yourself if it works. So talking about these crazy technologies, what exactly do we mean? Well, we have two different products based on them. One is MKTGhost, the other is MKTRedLine. So let's talk about MKTRedLine first. MKTRedLine is essentially a gauge. When it goes into the red line, you can generally expect a negative market event to happen. So this means that if you have money in the markets, something you need to pay attention to. Then we also have MKTGhost. So Lee?
Hi. So MKTGhost is a forecasting system that gives you predictive moves on 25 of the most liquid pairs in the FX market. The product itself has a number of different bells and whistles, and one of these is called the long wave. And what we know from the technology that is used to create it is we get a fairly good pattern. We can tell that this spike up here was likely to come down, and the spikes down here showed what sort of level it would get to. It's kind of fulfilled that at this point in time. And once you understand how to read this, because it's a shape detection type problem, you get an idea about where it's going to go.
So the question may be, why would you watch this video? Well, what we're going to be doing is every week, we're going to be using these technologies, saying what we think things are going to happen. And then we're going to go back the following week and see if we were right. That seems pretty crazy, pretty bold. A little nervous about it, got to be honest. But Lee, so what are we going to do? How are we going to look at these things? How are we going to make this work?
I thought it might be very useful, and the viewers may be interested to get a few predictions from MKTGhost, as it's already in beta program. And then we can talk about how people are utilizing this kit to trade and to make profits in the marketplace. And more importantly, Kim, we want to make sure we don't lose any money by being in the market at the wrong time, catching one of those big moves that you really don't want.
So the idea of being 100% transparent, making predictions, coming back the next week, seeing if we were right or wrong, is a little scary. And we're not going to say that our products are 100% accurate all the time, because if anybody does that, they are lying to you. And what we're trying to do is show everyone that this stuff actually works.
It does what it says on the tin, which is more important. It has value.
So the idea of Predict, Profit, Protect is that you can analyze using our products what's coming up as far as trends go. You can make more profit, and then you can protect it with MKTRedLine. And we've had some really interesting activity with MKTRedLine this past week. So yeah, let's talk about that.
Basically, it shot to 100 this week, Kim. Let me show you on the chart. Our dial gauge looks like this, and it was at 100. And it's so interesting because we had virtually nothing going on it. It was between 0 and 50 up until yesterday.
Exactly. So for context for everybody, this past week, the SVB bank collapse happened.
Well, yeah, I mean, they're still chopping up that bank. So the thing is, Kim, when you think about it, there's going to be a lot of repercussions. But what our technology tends to do from a historical basis is we get these spikes on MKTRedLine. They come along, and then what we're going to get is a period of time where we're going to have more volatility in the market and more irrational market moves. Now, that's the danger for trading. If you've got a strategy, you're busy working your strategy, it's great up until you get caught with a very big unexpected move. And we have seen some of those last year was really quite peaky with those. We saw quite a few of them. And we personally know people who lost a lot of money in some of those moves, a lot of money. Yeah, I mean, it's for everybody, okay? You don't have to be a trader for this stuff. If you are in charge of your portfolio and you need to rotate it between equities and not when you feel risk around, how would you like to know when you've got a much more significant chance of going into equities at a particular time, rotating your portfolio, and you've got a better chance of it going up than going down? That's what this product suite can do for people.
So whenever you're looking at this gauge, Lee, what does it tell you? What do you think is going to happen from this point?
Okay, so it's got a number of component parts to it. The first part is the dial gauge itself, which is measuring the rate of change on our market risk index. And it's got a little bit of maths in there to make sure it's as good as we can get it. And we always use our products, improve our products ourselves. But essentially, what it's doing is it's telling you whether it's rising or falling, whether you're in the red zone, you're in the amber zone, or you're in the green zone. And in addition to that, we have a little few boxes that tell you whether the market's operating normally, functioning normally. We don't anticipate unexpected price moves on instruments in the marketplace, or whether, like now, we've got a spike warning in effect. And what we want to do is make sure that, our customers who are using this product, are aware that there is, something going on in the marketplace. Now, what the product won't do, Kim, is it won't tell you exactly what's going to happen. It can't tell you if there's going to be a problem in bonds, whether the SVB banking crisis is going to be the issue. It can't tell you whether, you go down the bank tomorrow and there's going to be no cash there. It can't tell you those things. What it can tell you is something's in the pipeline.
So to be clear on this, what we generally see before when a spike happens is that a negative market event happens sometime in the next 3 to 4 days, correct?
Our last really serious 100 spike that we saw on our product was September the 23rd last year. And then literally within 24 trading hours later, we saw the near collapse of the UK pension system.
The big news right now is the SVB bank collapse. Did we see that?
So it wasn't warning. Didn't have a problem with that.
So one of the things I found really interesting about this is before the SVB collapse, we did see spikes in individual currencies.
Yeah, you do get that. And if we go over to our trader version, we've got a set of individual FX pairs. Now, one of the interesting ones is down here, which is US dollar Swiss. And what you can see here is, it made a very big spike.
And to really be like sort of open with this and discuss this in front of the entire world, I was seeing spikes in a lot of these currency pairs from the 6th to the 8th, some at the 4th, and there were a lot of spikes around those times. And I immediately thought, do we need to fine tune the gauge? Did we actually see a lot of money movement or something before that bank crash?
Yes, there is something there with that spike there. Okay. And you know why? Because it shot up and the current couldn't work it out either. So, yeah, I mean, there is something there.
If we're seeing something in the euro US dollar chart that spikes up like that the day before, does it mean something? Does it not? That's what we're trying to figure out. That's what we're trying to work on. One of the reasons we have the trader version of this app, of the MKTRedLine app, is to have a forum of professional traders, people that are digital scientists, data scientists, getting in there and looking at all this. And I think we're going to figure out a lot.
Right. And the idea is that what we want to do is we want to have the data open, transparent. We've got buttons here so you can actually download the data. And there's plenty of people in the world who will be able and very interested to utilize this data to help cross-reference things that they might already know.
So as far as the making bold predictions part of this, what are we going to say about that?
We're expecting euro US dollar to sort of hover around the price that it is overnight. It might try for 1085, and that's because we've got this peak up here. This tells us levels. It's very good at picking out levels. But really, I'm expecting it to come back down in the future, down to 105.
And that's exactly what we use this stuff for. So one of the things that's really intriguing to me is the performance our traders are having using these products. They get out of the market whenever there's a warning, and they use Ghost to look at trends, and the data is right there in front of you. They've had 5 non-profitable days in the last 6 months and returns in up around average of 10%. You know, we can actually look at the actual percentages of each month. But if you look at this, the record is incredible.
The top chart in the left-hand side, you can see the equity line in terms of profitability. You can see it's almost a nice straight line, and that's despite all the market events we're seeing. And the key thing is, you know, we are taking as little risk as possible. You know, we did 1,250 pips last month alone, which is a very nice amount of pips to get. So it's a very, very little risk on each trade, lots of little trades. And as you can see down in the today, this week, this month, and this year, you know, we're doing very well this year.
So with all the information we have in the trader version and the graphs and the data people can pull together and look at, we've got the risk index, right? So you want to talk about that?
You know, generally what we see is when the risk index is above this magic number of 41, we tend to see sideways moves or down on indices, which means basically equities do poorly. And, you know, it's very interesting if you look at all the different types of indices, and we have data for all of that. But essentially, we went into a period of calm. As you can see, it was under the 41, and that's usually associated with money creation. But now it's going back up, and now we're into potentially some dangerous moves because it's come up really quickly, and we do tend to see strange economic things going on.
So, in other words, we picked a really great week to start doing these videos.
Yeah, well, we're excited, okay, because you know what? We don't want bad things to happen, but you know what we want to do is we want to show off the capabilities, because you know I've just talked with a trader today, and he was saying, well, you know, the bank thing all seems to be quite calm. It's all calmed down. Everything seems to go back to normal. Our data doesn't show that, and that's the interesting point.
It's going to be an interesting week coming up, everybody. Thanks a lot. Hey everybody, we thought we'd try something a little bit different. We don't want you to like this video. What we want you to do is come back Tuesday, and if that prediction was right, how about a like? Fair, right? Thanks.